Hi, I'm Steve Spencer from SMB Capital. And today's trading lesson is on a trading scenario that doesn't happen that often, but is a pretty high probability trading setup, and so I wanted to discuss it. This is a trade that happened recently. The scenario happened recently in Costco, C-O-S-T, where they paid out a special dividend. What a special dividend is a one-time payment to shareholders. And in this case, they paid out $5. So the way that it works is anyone who owns the shares at the close of business on the record date will be paid out a $5 dividend. And people are aware of this. They buy the stock ahead of the record date, and the stock gets bid up. And then the following day, once it begins to trade without the dividend, not only does it come down the equivalent of the dividend price, but it actually overshoots to the downside. Because people start to exit and create downside pressure and more people start to get out. And so if we take a look at the chart for the day before and the day after this event happened, I want to kind of run you through how you can trade this. So number one, we can see it's bought very heavily on that record date. It runs up more than one ATR. The ATR is $3.50. And what you want to do is actually, after it has the big run up and starts to move sideways in the afternoon, establish your short position, and you want to be coming in short on the next day. The next day, when you adjust for that dividend, it should gap down $5, which would be the amount the dividend is paid out, and then you're looking for capturing up to one ATR of downside as people exit out of the trade. And I've drawn two blue lines there. The bottom blue line would be a one ATR move to the downside. That top blue line was about a $2 down move, kind of about 60% or so of an ATR. And just to kind of give us a target for that particular day for an area to start to look to kind of cover the short. So that's scenario number one. Get short in the afternoon before it gets paid out, when it's not going vertical in the morning like that. And you have it coming in the next morning, and you look for sell pressure, and then cover into that kind of that blue range. The other thing that you can do is when it bounces and you're starting to cover your short position, is look for it to fail exactly at the equivalent of being flat for the prior day. And so that's kind of where I highlighted that top arrow there, is as it bounced up there and it got to the equivalent of where it closed the prior day, that's a spot where you might look to short it as well. But the simpler thing to do is just come in short, look for the selling pressure on the open, and take it off between a half and one ATR, and take advantage of people trying to exit the next day. So hopefully you learned something there. It's not something that happens quite often, but next time you see a special dividend, you can kind of use this for your playbook. Thank you.